Hi, JJ here with the Art of Value. Thanks for joining me again on my investment journey. I hope you're getting some value out of it too. Today I'm going to talk about Tesla stock again, the third time in a row since I'm now a Tesla investor. So I'm going to leave some links at the end of this video and in the description if you want to go back and look at the other two. But today I want to talk about respond to a video by Solving the Money Problem. That's Stephen Mark Ryan. I think it's a good chance to talk about the dangers of going all in on one company, one stock, and also that price matters, those two things. I think it's a good example because this guy has been around on YouTube for a few years. He's been investing in just one stock. I think he invested in Google and Amazon earlier on and then just went all in on Tesla. He's been making videos pretty much every day. He's got a massive YouTube channel and the stock has been plunging recently. Obviously, as we know, Tesla's down, I think it was 73% when he made this video that I'm going to respond to. And so let's get into it. So there's a school of thought typified by, I think, the motley fool way of investing, where they say price doesn't matter. A school of growth investing where you just buy at any price, which I think is usually probably fine if it's at a reasonable price. But after a long bull market like we've had before the bear market started, it was a decade of bull market, which it works as that goes along, but in the late stages of a bull market, and I think in a bubble, I'm going to talk about the bubble I think we've had in certain stocks, including Tesla. I think price does matter. It matters a lot because it can take a long time to unwind from that, to recover from that if you buy a company, a stock at a too high a price. And as for going all in on one stock like Stephen Mark Ryan and a couple of other investors I know a few investors that are all in on Tesla, and there have been other stocks like Peloton and Palantir where I've seen this phenomenon, this trend of being all in. I think it's kind of late bull market stuff really, but we've seen a lot of it. So I think it's risky, it's dangerous, unless you're someone like Warren Buffett. And there have been a number of people over the last few years who've claimed to be the next Warren Buffett, or other people have said they're the next Warren Buffett. Okay, solving the money problem. Let's have a little bit of background. So Stephen Mark Ryan has 254,000 YouTube subscribers, which is a lot. He has a Patreon as well. And he made this video called Implosion, Tesla Stock Craters to Stunning Low 73%, minus 73% from the peak. It was about the day before yesterday, I think. So this is a fresh video. So the Tesla market cap got to $1.2 trillion, which is just crazy. It's incredible. He didn't think so. So this guy's Patreon has a lot of subscribers built up over the time when Tesla's been in this bubble situation, I think, and since when he started the channel, which is a while ago. So the lowest tier is like $12 a month. And so I think he's making about, it seems to be making maybe as much as 150,000 US dollars a year from his Patreon alone. Then you've got YouTube advertising and you've got merch, which is probably not very much, but advertising revenue is a lot because he's got so many subscribers. And so I estimate he could be making upwards of 300,000 US dollars a year at the moment from his channel. And that's been going into being funneled into buying stock as far as I can see. He's also got real estate investments. He is fairly transparent, which gives us a lot of information about his investments and how it's been going. So Stephen in this video, when he talks about his own position, says, and I'm going to quote a bit here, he says, if you're doing backflips and celebrating at the massive discount Tesla stock is currently available for, I think you're going to make it in investing. If you're crying in the corner, whining, complaining, or blaming, I don't think you're cut out for investing. And I genuinely do believe that. Your psychology as a long-term investor is critically important to avoiding enormous errors of judgment. I don't have any problem with that. I think that's true. Being a long-term investor is good. Just the way that he invests is just buying all the time, no matter what the price, and sort of dollar cost averaging from the beginning. I see nothing wrong with that. So as I said, I'm a Tesla shareholder too, so I bought recently. So obviously I think the price is not bad now. As I've said in the other videos, which I said I'll link to at the end of the video and in the description, I've talked about when I bought and my strategy, that I'm willing to average down a lot because it could go a lot lower than it is now, I think. I don't know, that's just my opinion. It may not. We've had market sentiment that drove the stock up way too high into a bubble, and it could do the opposite. After a bubble, it usually goes the opposite direction and sentiment goes way too low. So I'm expecting that. He expressed that he's pretty shocked that it's down as much as it is now, but I'm not surprised. If you're enjoying this video so far, watching on YouTube, please give us a like to help with the algorithm. That'd be great. Thanks. So Stephen goes on, just for the record, I'm going to share some details, give a little fodder to the basement dwelling Tesla Q virgins who continue to troll me. Pretty abrasive, but that's people on Twitter who take the opposite view of being bullish, who are very bearish. They do troll them. But he says, because I'd just like to have this on record and document the entire process while you're crying, I'm buying. Stephen continues, Tesla stock today absolutely collapsing. This was a couple of days ago, and I mean that down almost 11.5%. That was on that day. It was pretty amazing. Just over $100 per share. I mean, I literally can't believe I'm saying this, but it actually happened. Over the past year, Tesla stock down 69% year to date and almost 73% since the all-time high, down over 73%. So he's pretty amazed that it's down this low. He's pretty shocked because he didn't see it as a bubble. In fact, he sent a tweet out the other day that says he didn't think it's a bubble like the dot-com bubble. But I did think it did. I think it was pretty obvious. So he was buying on the way up, as we'll see from his buys. So he does say since starting the YouTube channel, Tesla's up 400%, and that's about since late 2019. He has a heads up to any of the haters. I know you're watching, and then he's kind of abusive there about the haters, because in a moment I'm going to share my loss spawn for 2022 and all of my Tesla stock purchases going back to day one. My average purchase price, my total shares, etc. So, and then he's kind of abusive about the haters again, so I'll skip that bit. And so let's get into what he says. It is actually good of him to be transparent about his prices. He thinks it's going way higher over the next few years. I obviously do too, over the next decade. So I'm a buyer. I'm not one of his so-called haters, except for his videos I find pretty abrasive, and I don't watch them all the time. So you'll notice the style of his YouTube channel, his branding. He's got pretty much Elon Musk in every picture, sometimes Kathy Wood. And on his homepage of the channel, he's got a photo of Kathy Wood and her strategy. So he kind of admires the way she's thinking in terms of innovation. And of course, ARK stock has collapsed more than Tesla, but it's pretty much over. She talks about a 5-year time horizon. The 5-year price is pretty low. It hasn't been the S&P 500 at this point. She's still saying that it's going to the moon, but I think it was part of the bubble, and Tesla was part of that bubble. It's even being hit harder lately because Tesla's finally started to collapse to a big extent. So that's going to hurt ARK even more. I can see they're buying lately. So if we look at that table he's provided, back in 2016, his average price was just $14, and he had 77,000 buys in 2016, which was quite a lot for a retail investor. And then 2017, his average price was 16, still really low, and he bought more, $36,000. And I think he said he was retired, and so he didn't have a huge amount to invest, and it ramped up over time. But I think that's to do with YouTube revenue and Patreon revenue, actually. So in 2018, he invested $37,000. His average price was $18. So even compared to the price now, that's really low. 2019, it was $17, still low. He invested more, $51,000. But 2020, we get to 2020, and in the beginning of 2020, we had the COVID crash, and the stock went really low. All stocks went really low. We thought we were in for a really big recession, which it was, but obviously stimulus. I think that's where the kind of bubble in emerging tech started, including the EV bubble. And in Tesla, as I said in another video, I made a audio only version back. It was just audio back in 2020. In late 2020, December, I made a podcast called the EV bubble, where I talked about how crazy I thought the price was. And it did go on from that even then. But so in 2020, his price was $79, which was significantly more, and he invested $280,000. And I think that's part of probably where the YouTube revenue started to come in, Patreon revenue. So he was able to invest more, and I don't know that. I'm just my opinion, but I think that's probably true. That his income started to come from YouTube, from advertising and Patreon and merch as well. In 2021, he invested $776,000 at $266 price, which was not near the peak, but still, that's a huge jump. So he just, as I said, he's just buying and buying and not worrying about the price. He still thinks it's really cheap, actually. He thought it was cheap at the absolute peak of the bubble. I remember seeing his videos, and he said that again in this video. And in 2022, he his average price was $255, and he invested close to $1 million, in 2022 at 255, which is way above. So this has dragged his average price to $97. It started at 14 and under 20. It was under 20 for those 1, 2, 3, 4 years, and then he really pulled that price up, not worrying about the price, or he thought it was cheap. So is that not worrying about it, or is that just thinking it's cheap when it's in a bubble? And his average price is $97, which is just below where it is now, not far below. So he's dragged that price up and invested a huge amount of money during that bubble time. So he is not beating the S&P 500 at this point, whereas if he just kind of waited and thought this is too much and accumulated money and bought later, his average price would be a lot lower. But nevertheless, it's still below what it is now. I mean, a lot of you are probably going to say it's easy to say this in hindsight, and that's true. And usually it's probably okay just to buy at reasonable prices and dollar cost average. Certainly it is with the S&P 500 and the indexes, in my opinion. Not advice in my opinion, but dollar cost averaging over time will do well, and it might do well for him over time because it's still less, the price is still less than it is now. And he says, I'm smart enough to know I'm not smart enough to time the market. I'm thinking long term. In a decade, this will be a good buy. When I have money, I buy, I hold, and in a decade or so, I'll be very happy. And that might be true if you look back at, say, Amazon and companies like that. But again, as I said in previous videos, Amazon was in a bubble during the tech bubble, and the bus went down really low. It lost 93%. It went from over 100 down to low single figures, and I think there's a possibility that Tesla could do this. As I've said, Chicken Genius Singapore, as I responded to his video where he said it could go to 60. He's a momentum investor that invested on the way up, and now he's saying it would go to 60. I think that's possible. We'll see what happens, but Stephen obviously didn't see the bubble, which I think, and a lot of people dispute whether it is a bubble. Still, there's a lot of evidence that it was a bubble. He also says, I've been investing in Tesla stock for 7 years. I still think it's early. I haven't sold a single share. First piece of real estate I bought in 2010, I still own it. And that's fair enough. He talks about having put $500,000 of the 2022 buy from equity in real estate, which he says that you don't get a margin call on equity from real estate. But that's interesting too. I think, as somebody said, he invested in Sydney real estate. I don't know if that's true, or he lives in Sydney, so I assume it's Australian real estate. And there's evidence that the property market might be going down there too. I personally think it was a bubble. I lived in Sydney. I bought an apartment there, did well out of it. And before I moved to New Zealand and Australia has been a bubble. It's been going down 20% in New Zealand just this year. I don't know what's happening in Australia, but I just looked at a couple of articles online, and it seems like real estate prices are dropping. So there's some useful graphs that he provided, some bar graphs as well for us to look at. It's average price by year, and you can see that the price shot up in 2020, 2021, and 2022. I think that was the bubble. Just the narrative is from a lot of Tesla investors that it was pretty flat for a long time, and then the market came to its senses and sent Tesla up to where it was supposed to be. However, I think it was way more than it was supposed to be. And then Tesla shares bought per year. You can see that he bought the most in 2016 because they were cheap. And then they got more and more expensive. He was buying fewer, but it cost a lot more. And the last one, percentage of money invested versus percentage of shares bought. You can see that played out in this graph where we've got a percentage of money is higher for the number of shares, so in that bubble. So kind of the point of this video, as I said, that going all in on one stock, one company is so risky unless you happen to be Warren Buffett or Charlie Munger or something like that, which we are not. Even if you're in a one stock, people say that Tesla's got so many different avenues, but mostly it's still cars. There are different avenues, and I like where it's going with that they've got a lot going on with the solar FSD, if that eventually happens. Storage is what mostly I'm excited about. It's kind of the boring part, but as Elon said, it could be as big as cars or even bigger with stationary storage around the world. That could be really big when they eventually get that going and ramping up. Going all in is very risky. Warren Buffett is sort of guaranteed that he could get 50% compounding if he was working with just a few million rather than the hundreds of billions that he's got. Most of his wealth is in Berkshire Hathaway, but it's an incredibly diversified company, way more so than Tesla. And of course, we've seen other people come to grief, other investors going all in on Peloton in particular. I remember when people were all in on that, so sure that it was going to be like the Apple of connected fitness. I remember that. And Palantir with Peter Thiel involved, and he's talked about don't even do it unless it's a monopoly, and maybe it'll do well over time, but that just the initial enthusiasm, and now it dropped away. And there were other stocks like that too. So going all in is very risky, very dangerous. And the other thing, price matters. Price really matters. I have seen videos by people from the Motley Fool, the Bryans, those videos, Brian Feroldi, they really say price doesn't matter, and they do believe that. The founders of Motley Fool have that philosophy too, where they don't care, and they've done well over the time, but over the last 20 years they've done well out of that, buying companies as low as possible and growth companies with certain characteristics, and it's done well for them. So it can work, but you do have to ride out those bubbles that happen, and this has been a bubble. And I think you have to, as long as you've got kind of the dry powder to buy when it's low and high as well, it probably evens out, but better to buy low. But that's why, I mean, I'm a value investor, so I don't buy unless I think it's low, or at least reasonable price. Charlie Munger says buying at a reasonable price if it's a growth company will be fine. In fact, he's given historical references for that if you'd bought so-and-so company at a reasonably high price 20, 30, 40 years ago, it would have done well, and that's true, but it remains to be seen. I think to buy during a bubble is to be avoided at all costs, and there was a lot of FOMO around. I was susceptible to it. I've done it. I'm not criticizing because I've done it myself, even though I'm a value investor, and I was aware it was a bubble, and it still affected me, the FOMO at times. So everybody makes mistakes, just making as few mistakes as possible. But going all in on one stock means that the margin for error is so low. You can't make a mistake or you're in trouble. So maybe Tesla will do well over the long term. I think it will. I mean, I'm invested. I'm not anti, as I said. I've started to buy now, but I'm willing to go much lower as well. So what do you think of what I've said? Do you think that going all in is dangerous, and does price matter? These are things that I'd really like you to comment on if you can. And I know that Stephen's got a lot of subscribers, a lot of followers that really kind of believe and follow what he's doing. And so there must be opinions to the contrary out there, and I'm willing to have a conversation about that in the comments or on Twitter at The Art of Value. Join me there. Now that I'm a Tesla shareholder, I obviously intend to make more videos about Tesla. So if you'd like to see more, consider subscribing on YouTube or in your favorite podcast player if you're listening there, or watching on Spotify. And I will catch you next time.